Welcome. In this video, will the ZBCN coin uptrend continue? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. A very meaningful and stable uptrend structure is noticeable on the chart. Such trends are considered to be one of the most important technical indicators of the overall direction of the market and help traders in particular to take positions in a systematic and logical manner, reducing their emotional decisions. The upward price movement within this trend indicates that the market is moving with strong buyer support. This is because throughout this trend line, the price has repeatedly climbed to higher levels, with support from certain areas, and formed new highs after each correction. What is particularly noteworthy at this point is that the price has now touched exactly this rising trend line. This is a very critical point in terms of technical analysis, because every contact with the trend lines gives us important clues about the direction of the price. If the price reacts upwards again from this level, it's not only the beginning of a short-term uptrend, but also confirms that the trend is still healthy in the big picture. In such cases, traders' confidence is boosted, and new buyers are often observed entering the market at such support contacts. Furthermore, successful testing of trend lines in this way shows how well established the trend is. This is one of the basic building blocks of technical analysis. If the price manages to bounce upwards from this zone, this indicates that the market's uptrend is still valid and new buying opportunities are emerging. Prices moving above a particularly strong trend are a source of confidence for traders. Such structures can also cause investors who were skeptical about the direction of the price to decide to buy again. In addition, contacts with such trend lines are of great importance, not only technically, but also psychologically, because many traders make a decision about the direction of the price at the moment these levels are tested. Therefore, the upward reaction of the price after this contact can create a chain effect in the market. New long positions may be opened, trading volume may increase, and buyers may gain confidence. All of this would set the stage for the price to reach higher levels. However, it's important to remember that in the past, reactions from this trend line have successfully pushed the price higher. In particular, the fact that this line has worked several times before strengthens expectations that this contact could be successful again. Historical recurring structures are very important in technical analysis, and if there have been upward reactions from this line in the past, it is highly likely that the current contact will have the same result. Considered in this context, the current price action gives very positive signals. If traders carefully monitor these levels and take positions according to the reactions, they can make more rational and profitable transactions. In addition, the test of the trend lines without breaking them and the subsequent upward movement of the price technically reveals both the strength of the current trend and the market's willingness to rise. As a result, the price has now touched the rising trend line and could regain upward momentum with a support from here. This paints a positive picture for both short-term traders and long-term investors, because the upward movement from this point onwards could not only boost existing gains, but also set the stage for new highs. If the market reacts positively at this point, we are likely to see much higher price levels in the coming days. Especially if buyers maintain their strong stance and trading volume increases, it is possible that this uptrend will be maintained and further strengthened. But we cannot decide the analysis only with trends. Let's look at other metrics. Keep watching. Chart patterns are important structures in technical analysis that help us understand both trader psychology and market behavior. In particular, the inverted shoulder-head-shoulder pattern provides strong signals that the downtrend has ended and an uptrend may begin. On the current price chart, this classic but effective reversal pattern is clearly visible. The first shoulder of the pattern was formed when the price rebounded after falling to a certain level. This was followed by a deeper retracement to form the head of the pattern. This head is often considered as the last bearish move of the market. After this decline, the price rallied back up, but it encountered resistance near the first shoulder level and fell again, and as of now, it seems to be forming the last shoulder. The inverted shoulder-head-shoulder pattern is an important signal that the selling pressure experienced by traders during the downtrend has subsided, and the market is now accepting the lows. Such patterns have great significance, not only visually, but also as a reflection of market psychology. The first shoulder represents a temporary relief that traders experience in a downtrend, while the head represents panic selling and capitulation. The last shoulder indicates that the declines are no longer having a serious impact on the market and that buyers are moving in to regain control. The fact that the price is currently moving in the last shoulder area of the pattern indicates that an important opportunity is approaching. Because in technical analysis, when this pattern is completed and the so-called neckline resistance level is broken to the upside, there is usually a very strong and bullish movement. This breakout brings about a serious momentum shift in the market. With buyers re-entering the market, volume increasing, and positive sentiment prevailing, prices can take on a rally-like atmosphere. The target of the pattern is also quite specific. A target price is usually set by adding the depth of the head upwards from the point where the neckline is broken. This gives traders an idea of how long a potential uptrend could last. In the current chart, the distance between the bottom of the head and the neckline indicates serious upside potential. This means that if the price successfully completes this pattern and breaks above the neckline, an important technical rally will have begun. It is also natural for the price to move sideways or make slight retracements in the area where the last shoulder forms. This is usually a period when traders remain indecisive and wait for the direction to become clear. However, if strong support levels are maintained during this period and selling pressure weakens, the probability of successful completion of the pattern increases considerably. In technical analysis, it is necessary to be patient and carefully monitor the formation process before such structures are completed. Traders who wait patiently can make significant gains by spotting such reversal patterns in time. During the periods when such a strong pattern is formed, it is also important that the attention of market participants is directed towards this structure. This is because the breakout of the pattern will be noticed not only by technical analysts but also by a wide range of investors. This can cause the price to gain significant momentum in a short period of time. High-volume trades, especially when the neckline breaks, usually ensure the persistence of such price movements. Volume-backed breakouts boost traders' confidence and lead to more people opening positions. When all these technical and psychological elements come together, the current inverted shoulder-head-shoulder pattern offers a very promising and positive structure. The fact that the price is currently forming the last shoulder suggests that the last link of this major pattern has been completed. RSI is one of the most frequently used technical indicators in market analysis and is invaluable for traders in identifying both overbought and oversold areas. The information provided by the RSI reveals not only the direction of momentum, but also potential turning points. Looking at the current chart, it's easy to see that the RSI is moving in the direction of a trend and forming a remarkable uptrend. This rising trend line is notable as it has served as a support in the past, where the RSI has touched down several times and then bounced upwards. A retest of this line and the RSI's reaction to it could be extremely decisive for price action. We can see that the RSI is currently coming to this rising trend line. This line has previously acted as a strong support zone that has repeatedly turned the direction of the price upwards. Therefore, reaching this line again is a matter of great curiosity and excitement for investors. Such contacts provide an opportunity for the RSI to recover its strength and often signal whether the trend will hold or not. RSI needs to bounce from here. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.